Hey guys, hope you and the families are doing well. As traders, we'd like to be right 100% of the time. However, the reality of the situation is we're not going to be right 100% of the time, far from it. But is there something that we could use on a consistent basis to help improve our win rate when trading on the long side? I think there is, and I don't see this covered in the level of detail that I'm going to go in this YouTube video anywhere else, whether it be a course, whether it be a YouTube video, a book. I've never seen this level of detail that I'm going to take you through. Now, what I'm going to take you through is my entry in AEVA on the 23rd of June 2025, and I'm going to teach you how to identify relative strength across multiple durations. This is the secret sauce, being able to identify a relative strength across multiple durations in the outstanding leading stocks in the market. So I really hope you're going to get a lot out of this video. By the end, be able to identify relative strength across multiple durations, and it's something that you can apply and use within your proverbial trading toolbox. Market Search are today's video sponsor. They're my go-to resource for analyzing company fundamentals. If you're interested in a discounted trial, you'll find a link to that in the description and the comment section below. So let's go gadget straight into the video. We've got AEVA loaded up, the daily chart and the 5-minute chart overlaid with the triple Qs, which is going to be the most appropriate major index to be analyzing AEVA against. We're going to start off on the daily chart, then we'll go down onto the 5-minute chart, and I'm really going to highlight the intraday relative strength point and the relative strength on the daily chart, and then also talk about the trade management of the position from an intraday perspective, but also from a swing trading and positional perspective as well. So we're going to look at this from 4 main standpoints. That's number 1, identify; number 2, control; number 3, mitigate; and then number 4, optimize. So let's go straight into it. On the daily chart, we can see the AEVA from early May has been in the context of a powerful uptrend. The black line that you see on my chart there is the 10-day EMA. Now, what do you notice? Well, you can see that the stock has respected and stayed above, generally speaking, its 10-day EMA. We can see down here in early May, find support on the 10-day EMA, powerful move higher, pulls back, finds support around the 10-day EMA, pushes up, pulls back, finds support around the 10-day EMA, pushes up, pulls back, finds support around the 10-day EMA. So here is the first important point. The strongest stocks in the market will find supportive action around their 10-day EMA on the daily chart. That is what the strongest of the strong stocks do. Okay, still strong stocks, but less strong stocks, and it depends if there's a more significant market correction, will find support around this blue line, which is the 21-day EMA. So if you are looking to trade what I call tier 1 TML, so that's your true market leaders, your William O'Neill type stocks, the earnings are there, the sales are there, the estimates are there, the stories there, new innovative product, new growth area, whatever it may be, and also momentum leaders, the stocks that have high 20-day ADR percentages, are hitting 52-week highs, are trending like this, potentially building high type flag patterns, those kind of stocks. What they will do is find support around the 10-day EMA, such as AEVA. So momentum leader, 4D LiDAR technology, pretty interesting stuff if you want to go and check it out. During that time, what are we seeing for the triple Qs? Well, it's been in the context of an uptrend, but less strong. Okay, we can say, okay, moves here, loses the 10-day, bounces here, okay, shake out underneath the 10-day, but here, okay, kind of trading down and bounces perfectly yesterday, because I'm filming this on the 24th, bounces perfectly on Monday the 23rd, right off the 21-day EMA. And if you've been following my YouTube channel for a little while, you know about the Immorello, the intraday mean reversion long. Yesterday, absolutely textbook Immorello off the 21-day EMA. There it is right there, actually, and set up loads of good trading opportunities in the second half of yesterday's session. And there were really good opportunities trading opening range breakouts in the first part of the session, as you can see here with AEVA. So from the daily chart perspective, we can see a lot of strength, and it's around a sweet spot moving average being the 10-day EMA. I don't have my relative strength line plotted on here, but there's 52-week highs galore on the relative strength line as well. So we can see lots and lots of strength on the daily chart relative to the triple Qs. What we can also see is the stock is nearly 10 times quicker than the index. So this is also on that momentum leader point. What does that mean? 10 times quicker than the index. This ADR percentage being 1.21%. That is the 20-day average daily range percentage of the triple Qs. Over the last 20 days, it's been 1.21%. From the low of the day to the high of the day, excluding gaps, the average daily range has been 1.21%. But what's it been for AEVA? Well, the 20-day average daily range percentage has been 10.16%. So the average daily range from low of the day to the high of the day over the last 20 days has been 10.16%. Here it's 16. 0.59%. If I just go put a couple of others in, here is 10.64%. The next day looks a little bit smaller, 8.26%. So you can see how you get that average daily range. So what is it telling me? It's telling me AEVA is much quicker than the indexes. I like trading the quick stocks. That's where I gravitate to. I like the TMLs with higher 20-day ADR percentages. I like the momentum leaders with higher 20-day ADR percentages. They're the stocks that I really like to trade, especially when they are displaying relative strength across multiple durations, as I'm about to teach you. So then we dial in here again, and we start looking at the 5-minute chart for a possible entry. Now this black line that you see running across here, okay, this is the 10-day EMA price level. You see this black line running across right there, okay? I'm circling it. That there, see it? There it is on the daily chart. If you want that indicator, it's daily MAs on intraday charts. Search my name in TradingView, you will find it. It's really helpful. I like using it as a reference point. Why? Because you can see down here the triple Q's perfectly left yesterday, undercuts low of day, 21-day EMA, 5-minute shakeout demand tail, pop in the volume, largest volume of the session, right there, 5-minute shakeout demand tail, off it goes. Nice, really good trading opportunities following that with Morello's as they reversed off their intraday low. So it's really helpful to have those key daily moving averages plotted on the intraday charts as reference points for certain type of setups, such as ORB, such as Morello's, intraday mean reversion longs. Okay, what do we see in the first 5 minutes for AEVA? We know it's strong on the daily chart. It's one that's on my radar. How I've got my trading view, how I've got my trading station set up is I'm keeping tabs on about 80 different stocks during the session. Okay, multiple monitors. I'm looking at about 80 stocks during the session, combinations of TMLs, momentum leaders, stocks in group themes that I think may be strong, provide opportunities, whether that's crypto stocks, precious metal miners, semiconductors, software AI related, whatever it may be. Okay, keeping tabs on about 80, and this is what I'm doing. I'm dialing in and going, okay, where is the strength? Where are the algos? Where are the institutions flowing today? Where is the relative strength across multiple durations? Putting a high degree on, or a significant weighting on, intraday relative strength. So how did I know that AEVA could be in for a big session? First 5-minute candlestick. Look at this. Okay, this is the 9:30 Eastern time bar. Look at that first 5-minute candlestick relative to the first 5-minute candlestick of the triple Qs. They could not be any more opposite if they tried. Do you see this? Look at the first 5-minute candlestick for the triple Qs. Look at the first 5-minute candlestick for AEVA. They could not be any more different. This is where you build out your mental representations. If you want a fantastic book on deliberate practice, building out your mental representations, Peak by Anders Ericsson. Okay, Peak by Anders Ericsson. Fantastic book for understanding how you learn, how you get better at things. What you need to be able to do with trading is quickly assimilate information, use information, and make high quality trading decisions, especially when a stock like AEVA, which is one of the strongest stocks in the market, along with other LiDAR related stocks like OUSD, are displaying intraday relative strength, and to a significant degree. So what we see with the triple Qs, it rolls out of bed. That's the technical term. It just rolls out of bed. Opens on the high of that 5-minute bar for the first 5-minute candlestick of the session. Opens on the high, goes out pretty much near the low. Weak action down to the 21-day EMA. Subsequently reverses. We'll come on to that. But what do we see with AEVA? Well, it opens right there on the 10-day EMA, pushes, strong close, and it goes. This here, this relative strength in the first 5 minutes often precedes, okay, absolute strength. Relative strength precedes absolute strength. I'll say it again. Relative strength precedes absolute strength. So what I mean by that is the stock can show you a lot of relative strength, but it may not really go anywhere. Okay, the percentage gain may not be significant, because if you look at that first 5-minute bar, it's not overly significant. It's about 2.5% or so, 2.75%. It's not really a big move. But what follows is you can see the stock goes from lower day to the high of the day, 18.33%. That's the absolute strength coming in. So what I'm trying to do on a daily basis is dial in, especially when we're in these volatile type of markets, dial in on what are the leading stocks, TMLs, momentum leaders, that display the relative strength that then turns into the absolute strength, and get positioned in them. So when I see such divergence like this in a leading stock around a key daily moving average, I want to dial in, or averages. It could be a clustering of, say, the 10-day and the 21. I want to dial in on that stock. So I take the 5-minute ORB here. Then what we see is the stock continues to push. However, now let's talk from the trade management standpoint from an intraday basis, and then we'll talk about it from a swing trading and positional perspective. So then we'll look on the daily chart in a minute. From a 5-minute time frame, when we're looking at the intraday chart here, okay, what do we see? Well, the stock goes from low of the day to high of the day 18.33%, and it stays above this orange line, which is the 5 minutes 6 EMA. Really good for encapsulating intraday trends, powerful intraday trends in leading stocks. And then at 10:20, what we've seen is the stock from lower day to high of the day go up 18.33%. Now, what does that mean? Why is that significant? Because the stock is up circa 1.8 times its 20-day ADR percentage in pretty much a straight line. Okay, this is about as straight line as a straight line gets in terms of stock movement. This is very, very quick. Plus, it's at 1.8 times its 20-day ADR percentage. Think about the 20-day ADR percentage as fuel within the proverbial fuel tank. As soon as the stock starts getting in range of its 20-day ADR percentage, it may go a little bit more, but it gets less and less probable based on the prior character. So when it's up here nearly 2 times its 20-day ADR percentage, that is a very big move. You may have seen my recent videos on OCLO and SMR and how I traded those, and how you can think about the 20-day ADR percentage for the range of the stock and what is potentially plausible for the stock that session. So I like to use, I talk about it on the blueprint video on the channel on the daily chart, low the day, low the day, low the day technique. So when a stock gets extended, so you can see here actually prior to this breaks out of a really nice base. If you think a stock gets extended, now what I'm about to teach you here for me is applicable on the daily chart, 5-minute chart as well. It's exactly the same kind of thinking and logic here, okay? Let's say that you have this breakout here, okay? You get it here, and on this day here, you're thinking, oh, this is extended, this is it, I'm just going to exit. Well, had you have done that, and let's say you exit at the close, the stock then goes up another 75% in 6 sessions or so. So you let your emotions dictate what you were going to do. You don't want to do that in trading. You want to be rules-based. You want to be systematic, disciplined where possible. Okay? The mistake most traders make is selling big winning positions too early. So what I like to do is employ the method that Davis spoke about in his book 60 odd years ago. And that is let your stop loss decide. Okay, if you get something else from this video, along with this relative strength point that we're talking about across multiple durations, is let your stop loss decide. Let your stop loss decide. So ready, watch this. So imagine that you had your entry around here, okay? Let's say you think, oh, this stock here, you're like, ah, this is so extended. Maybe you think here it gaps up a little bit and you're like, that's me, I'm done. And well, what if you just went lower the day, lower the day, lower the day, lower the day, lower the day? You're then taken out up here. Not bad, right? Not bad. Had you have employed that same method here on the 5-minute chart, and let's say here you're going, oh, this is so extended, this is so, look at this move, it's extended. Well, lower the bar, 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 lower the bar. Pretty effective, right? Really, really effective technique. Okay, lower the bar or lower the day. Lower the bar if it's an intraday time frame, obviously. Lower the day if it's on the daily chart. Okay, really, really effective way to think about optimizing profits, both in terms of the size of the monetary gain, but the efficiency of the gain as well. That's the time value element. Okay, so we want to think about the optimization. Now we're going to go into some Alice in Wonderland, deep down the rabbit hole stuff. This is where we're going to look for the stock to start displaying intraday relative weakness. Here we were dialed in at 9:30, looking at the intraday relative strength and the strength that continued as the stock was trending above its 5-minute 6 EMA being the orange line. Then what we see here at 9:35, we start to see some weakness developing. Okay, so you want to train your eyes visually in your mental representations for what does intraday relative strength look like? What does intraday relative weakness look like? Okay, when the stock starts weakening here and it's up 1.8 times, or it's been up 1.8 times its 20-day ADR percentage, that is usually when I want to start exiting. Okay, when I start to then see the weakness come through. So there's the lower the bar technique, but there's also this technique that I'm about to teach you here. See how it closes at 9:35 below the 5-minute 6 EMA. And it's gone red bar, so red bar at 10:25, red bar 10:30, red bar 10:35, all Eastern time. Okay, what do we see during that same time period for the triple Qs? Tight, tight sideways. Do you see that? Look at this. See the downtrend that's emerging here for AEVA and context of what I was just talking about. It's up 1.8 times its 20-day ADR percentage effectively in a straight line. Now, over the course of this 15 minutes, you're starting to see this divergence. If you look at the final kind of nail in the proverbial coffin here for AEVA that the move is probably done today, look at 1040. Look at 1040. Again, bearish bar closes weak on the low of that 5-minute bar. Look at the bar at 1040 for the Qs. Look, polar opposite. Do you see it? Look at 1040 for AEVA. Look at 1040 for the Qs. The Qs has gone tight, 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 trying to push. AEVA goes down, 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 down. Can't rally, can't rally, can't rally, can't rally. Are you seeing the divergence here? Both in terms of, so intraday relative strength. This is indeed, you are not going to find this anywhere. Like anywhere. You won't find this anywhere in YouTube land. You won't read this in any book. You won't find this in any course. This is the level of detail if you want to do this at a really, really high level. Like a really high level. This is how good you have to be. This is the level that you need to get to. This is the detail in which you need to be thinking about things. You can't do this haphazardly. You are up against fierce, fierce competition. AI algorithms, PhDs, supercomputers, me, other traders, yourself. It's one of the biggest battles yourself. Like, this is the level of detail. This is fierce out here. This is what you need to go into. This is how you need to think about things. So then you start to see the intraday relative weakness coming through. Make sense? You're starting to see that? Intraday relative strength early on, then starts transitioning into intraday relative weakness, and the stock's up 1.8 times, has been up 1.8 times, is 20-day ADR percentage. Starting to see? So here, intraday relative weakness, exit it. Here, lower the bar, lower the bar, lower the bar, exit it. Would be really, really effective here. Same on the daily chart with the low the day, low the day, low the day approach. Now, if we were thinking about this from a swing positional standpoint for how we may want to manage the position on the daily chart, what moving average have you noticed has been really effective for keeping you in the trade? So I just clear these up. So this is where we base our decisions on the character of the stock. Now, what you could do here, just before I go on to the daily chart, is you could also go and think about and look back and study, okay, when AEVA has a big move intraday, what does it do? What does it tend to look like? Stocks have repeatable characteristics. You just need to put in the work and study them and listen to what they're saying and what they are telling you to do. It's not too difficult. It just takes some work. But a lot of you will then click onto another shiny object syndrome. Oh, another video over here about this super duper indicator that has 100%. You'll just go click. You'll just go watch another video. Another video, another video, another video, rather than deliberately practice things and get better at things and improve your skill set as a trader. Make the distinction between the difference between knowledge and skill set. A lot of you have a lot of knowledge. Hopefully by the end of this video, your knowledge has gone up, but then you've got to practice deliberately to get your skill set up. You've then got to work on things like this. Go bar by bar. Start to notice these nuances. Okay, here I'm holding it strong, it's strong, it's strong. Now it's weaker, weaker. Okay, now I start to exit. This is the level that you have to go into. So if we were to look here on the daily chart for AEVA, and again, let's say that you had an entry here. We know that the 10-day EMA is a little bit of a sweet spot. Okay, I was picking it up on here as well, off the 10, off the 10, off the 10, around here as well. What moving average do you notice works quite well? The 10-day EMA. Just before, because I forgot to finish the point I was going to make. What you may want to do as well is, if you're going to start utilizing, say, what I call Immorellos or opening range breakouts, okay, what you may want to do, go look at this session from the 6th of May. Go look at that session. Go look at the session here from the 22nd of May. Go look at the current session that we're looking at, being the 23rd of May. Go look at this session here. What I'm doing is I'm pointing to sessions where the stock was strong. Okay, you can see it. I'm pointing to these widespread green candlesticks with elevated volume on that session. Go and study those sessions from an intraday basis. Pull up the 5-minute chart like we're doing here. You'll notice many similar characteristics. I may even finish with that. I may even then take you back to 22nd of May. Okay, this bar here. I'll take you back there after this, okay? But go and study that, because you'll see the same repeatable characteristics. But from a daily chart perspective and a management perspective, I'll finally get back to that. See how effective the 10-day EMA has been as a trading stop. So what's that indicating to me to use? The 10-day EMA could continue to be very effective. It's been really effective for this stock. So the 10-day EMA could be a really effective trading stop loss for this stock, and also the ability to go lower the bar, lower the bar, lower the bar, lower the bar, as we were saying. So this is then how we can think about optimizing of profits on the daily chart based on the character of the stock. Now what I'm going to do is I'm going to take you back to this day here, the 22nd of May. Let me take you back. Let's go back in here, 22nd of May. We don't have it for the triple Qs loaded up. I'll tell you what, let's do it for the triple Qs as well. And 22nd of May for the triple Qs. Okay, look at this. Ready? It's exactly the same thing that I've just been teaching you. Let's try and get these lined up a little bit better. 10 a.m., 10 a.m. Okay, look at AEVA. So we're looking at this bar here. Okay, we're now here. I'm going to clear all these markings. We are looking at this day here. Okay, watch this. Ready? let's say we go for the first 5-minute ORB again. Okay, you'll then see the levels come on the daily chart like this. What do you notice has happened in the first 5 minutes for AEVA? Look at this, first 5-minute bar for AEVA versus the first 5-minute bar for the triple Qs. Look at the triple Qs. Big supply shoot, rolls out of bed, weak close. AEVA opens on the low, trying to go. Opens on the low, trying to go. Cool, rhymes, doesn't it? Poet and I don't even know it. What's the range of that day? 16%, not bad. If the ADR was around about 10%, that could be 1.6 times. While the triple Qs hasn't really, where's the 22nd? While the triple Qs 22nd is just like an inside doji day. The triple Qs just up and down, up and down, up and down, up and down. So the triple Qs doesn't go anywhere that session, whereas AEVA is absolutely powered up. What did it do? Were there characteristics? Were there signs? We can see it in the first 5 minutes already. Relative strength precedes absolute strength. Are you starting to see how important this is? Dialing in the opening part of the, where is the strength? What are the leading stocks? This is what they tend to do before they go on big moves. So this is where you want to be aware of relative strength across multiple durations and then have a well-equipped trading toolbox to trade such situations, which is what I'm trying to teach you on this YouTube video for free. So I don't think you're going to find what we've just gone into, this level of depth, anywhere else on YouTube, and even in books. But you're just not going to find it. So I really hope you guys have enjoyed that video, that you've learned a lot there in terms of relative strength, multiple durations, thinking about other aspects from a trade management standpoint, the identification, the stop loss low day, thinking about initial stop loss relative to the 20-day ADR percentage as well, how to mitigate risk, how to then optimize profits as well, various selling techniques and guidelines that I've gone into that. So thank you very much for watching. A little bit of a rant, wasn't it? But hopefully useful for you. And as always, I look forward to seeing you in a future video.